Yes, good afternoon, folks. Just waiting for a few more to come into the room. This is an unannounced an unannounced live stream. So we're just going to see how this plays out. This is our first live stream. I'm not sure if you can hear me. Maybe you can give me a thumbs up, Adam, if you can hear me. I haven't started the video yet, but if you can give me a thumbs up, then I know that it's coming through okay. Good afternoon, Gary. Good afternoon. And Koopaloop can hear me as well. Thumbs up from Andrew, Joel, Gary Foster. Sounds good. Okay, good stuff. I'll start the video in a minute. I'll say just getting the notifications out there, and then we'll have a little chat. Always takes a few minutes for folk to think, hang on, what's going on? Is this going to be a live stream? Is it real? Is that guy real? Good stuff, Mehan. Loud and clear from Mike as well. We can hear you fine. Okay, just a couple more minutes and we'll get going. Okay, folks, here we are. I hope you can see me now, see me coming through. The video is just coming through now, Sleeping with Sirens. When do you start? I'm starting about now. There was no set time for this. I wanted to see basically how, what the following is and what the take up is, people actually watching me live. I know a lot of you have been following my videos over the last year or so, and first of all, I'd like to thank you for all your lovely comments that we've had over the last year or so. I tried to make them as entertaining. Thanks very much, Gary. And Osman, a nice blue shirt. Well, at least you can tell it's real and live. Yeah, so the videos that I've been doing over the last year or so, I mean, they've been really fun doing, and we do it all for free just to get some knowledge out there, because the place is a minefield of lots of stuff going on. So I'd enjoy doing them anyway, and I try to cover topics that you guys want to hear. So I do get quite a lot of feedback, as you would imagine. I mean, one of the videos last, I think it was the law of large numbers. I don't know if you ever watched that one. That got up to about 600,000 views at one point, and then something happened to YouTube and it got taken down, and it's back up again now at 300,000 views. So you can imagine I get a lot of comments coming back from people. We do have a team of people monitoring that. So I try to get back to most of you as much as I can. But obviously it's quite difficult sometimes. But do always keep the chats coming through, because it's useful to see what you're, if I'm hitting the right buttons and making sure I'm getting to you, making sure you understand what I'm doing in these videos. And if there's anything you want covered, please do let me know as well, because obviously it's ongoing. I will be doing this, for the foreseeable future. And obviously the topics at the end of the day are what I want you. I want you to basically control the topics. Anything you think need covering in terms of the markets, trading, FX, and so forth. And what we're going to do, now some periodically we're going to be doing these like live events on YouTube, just so you got a chance to ask me questions. I think Peter is in the room, my colleague. Peter, if you can possibly, Anton Coyle is the man. I've watched his streams. He's a good guy. Well, I don't know if he's a good guy. I've never met him, but he's talked a lot of sense. Yeah, so just I've got a colleague of mine who's listening in as well. His name's Peter. He's going to keep an eye on the chat. If I miss any questions, then Peter might drop them on a Skype to me as well, because he's on one of my other screens here, Skyping me as well, the people that are coming in. So I'm not ignoring anyone. If you drop a question in and I don't reply, I'll try and get to them at the end. I will do questions at the end, because it's much much more likely that you're going to get my attention rather than me just go through this. This is a quick stream today, by the way. I'm just going to have a quick look at the week ahead, because it's quite a busy week. And then we'll look at some charts and see some levels that we're looking at. So I do appreciate if you leave the questions to the end. It'd be interesting to know, in fact, where Fame FX. Andrew is our man. I think you're one of our members in the room, Fame. Good to see you on the live channel as well. Maybe you guys are all buzzing away there. Let me know where you're from. I see we've got one there from Nigeria, another one in from Kenya. I think Fame, she's from the United States. I know that because she won a T-shirt once, and we ended up having to send that out all the way out to the United States from the UK, which is fine. So let me know where you're from, and it's good to have a bit of a survey to see where I'm beaming around. I know we've got quite a few followers in there now, so it's coming across loud and clear. That's good. Right, okay, look, this week is a really busy week. I mean, it ties in nicely. I planned to do this live event a while back. I said it's only going to be a quickie, but this is a really busy week for the Forex markets and markets in general. I just want to touch on basically what we've got going on in the world now. I know it appears a lot of you are knowledgeable, some of you are not so knowledgeable, but I think as a trader it's always worth knowing what's going on in the world. Now I'm a technical trader, and that means I like to follow price action on charts. Okay, typically when I used to be in the trading pits in the in the olden days, there's my jacket there, you've seen me there on the videos. I used to stand in a trading pit shouting and screaming at people. And we didn't have all these technicals. All we had was what was going in front of us. We didn't have all the charts, and we just had people shouting and screaming in front of us. And we had up a little green old screen telling us what non-farm payroll was came out, or what unemployment was, or what inflation was, or what have you. But really, we had very little to go on. And so in my pit days, I was generally a technical trader. When I say technical, you're trading what you see in front of you, as opposed to trading fundamentals. And that's pretty much the way I am today. However, I think it's important that you do have a grasp of the fundamentals. And the fundamentals this week are very, very important. Whether you actually trade off the fundamentals is that's up to you. I mean, that's obviously a different game altogether. But being aware of the fundamentals, I think, in this business is still very important. So basically what's going on. Makes the day more interesting, for one thing, I think, anyway. So what we had over the weekend, for those that have been following the news and the fundamentals, you would have seen we had G7. G7 stands for Group 7. Last year it used to be G8 with Russia, but because of Russia and they got taken away from the table, so it's now the G7. So it's the major industrialized state countries. They get together and they discuss trade and what have you. So this week it all kicked off, as you well know, with Donald Trump and with everyone else. Let's just say it that way. And I'm not going to get political on these YouTube things, but let's just say it got political, and Donald Trump did upset a few people, and certainly was very keen on his protectionism and what have you. So what you saw from the follow-on from there this morning was basically a move higher in US interest rates. The 10-year government bond rate started to push up, and the dollar actually started catching a bit of a bid this morning when we opened, certainly an Asian session overnight. And then the market was following basically the yield market up, and dollar was catching a bit of a bid. So we'll go to the charts in a minute, and I'll show you exactly what's been going on in the dollar. but then obviously it turned back around a little bit, and dollar has found and came back, but it did find that support zone on the index that we're going to look at again in a minute. So in fact, let's have a quick look at that now, so you know exactly what I'm talking about. Let me just pull up the price chart. So this is the dollar index. Okay, this is what happened this morning out of the gate. Okay, so dollar started catching bids this morning out of basically following the yield markets up. We got up to 93.60. This is a key chart I look at all the time in our live streams that we do throughout the day on the Forex Signal site for those members. We've been talking about this level in the dollar for quite a long time. Okay, now this is the dollar daily chart. DXY is the dollar index. For those that don't know what that is, it's the dollar index. It's basically the dollar pitched against 10 or 9 other major currencies internationally around the world. But the major component of the dollar index happens to be the euro. So the euro is the biggest currency. Then you've got the Japanese yen, then you've got the pound, and all the others sort of like peter down. But this is predominantly against the, well, it's about 60% the euro, and the rest are scattered. I think it's 18% Japan, and then 12, and then just really does peter out. But what we've been looking at here is this move from the dollar all the way back down from 102 down to 87. Okay, and this move basically was got some consolidation. So once you saw this move back down, we saw a pullback into this zone here, this 50% pullback of this bigger move. And indeed, if you look to the left of the chart, you'll see in here, I've sort of like put it out in blue, like a well, there's two head and shoulders patterns going on here. Now, I don't want to go too much into head and shoulders just on this live stream, but I mean, maybe I'll do a video on it at some point. But it's a pattern that a lot of chartists and technical traders will look at. You've got the head up here. In fact, let me just get a drawing tool out, and I can possibly, if my drawing tool works, I can show you exactly what I'm talking about. Let's just see if it does. I always have to reset it when I go on live. We do this every day around the clock, and I always have to reset it. Really annoying. So what we're looking at, so this is the head and shoulders pattern that we respected on the way down. So the market's making a move down, found some support. Remember, this is daily, so they're quite key levels. Daily support here. Okay, and then you had this head up here. Okay, so this is the mini head and shoulders within the bigger picture. So you've got a shoulders there, you've got a shoulder here, and you've got the head here. But then this broke this level, and this level was respected perfectly. So normally when you see there the neckline of the head and shoulders pattern break, normally the target level is the extension of the distance between the top of the head and the neckline, and that indeed was exactly where the market stalled before it bounced back up. But within there now you've got two shoulders, basically shoulders within the bigger picture. So you've got two head and shoulders patterns on top of each other, a small one and a bigger one. So now you've got you've got the shoulders there, and then you've got the shoulder here and the shoulder here. This has been a big level for us. Okay, the whole distance between there and there, okay, was matched to the extension down here. That's where the whole dollar index found its support back down there at those levels below 88, and that's exactly where it was. This head and shoulders pattern behaved perfectly at those levels. Okay, and we've been talking about that, as I say, for quite a long time. Now the dollar has put this bid back up, okay, and it came right back in to the previous head of that pattern there. Okay, so you can see that exactly where we came back into, and this is where it stalled the second time around. Now the dollar has fallen back, and it's come back down into the shoulders, the mini head and shoulders in this bigger picture. This comes in at 93.25. I've been talking about this 93.25 level for a few days now, because if the dollar at the moment is still in a bull trend, it's still in an uptrend. You can see it's moved from here all the way up. It's still in an uptrend. This is not an end of the trend at the moment. For the end of the trend of the dollar to see any pullback, you need to see a break of this level of 93.20. And that's when I might start changing my track on dollar positions. At the moment, most of the trades that we're looking at are long dollar, short weaker currencies against it. Okay, in particular the pound, in particular the safety haven currencies like the Japanese yen and the Swiss and so forth. We'll come to that in a moment. So that's basically what the dollar is doing at the moment. So this week we've got the FOMC. Now the FOMC is the Federal Open Market Committee meeting. It's when they decide on their interest rates. Now for those of you that follow economics or the fundamentals, you'll know that the Fed have penciled in that they're going to hike rates 3 times in 2018 and 2 times next year. Okay, they've already hiked rates once. Okay, it's likely that they're going to hike rates. So I beg your pardon. They've already hiked rates twice. It's likely they're going to hike rates this week. Okay, coming into the June meeting. The question is, will they be hiking rates 4 times? At the moment, the economic data out of the US, unemployment, non-farm payroll, average earnings, a lot of signs that inflation is creeping up. So there's a likelihood that you will see some rhetoric out of the FOMC this week that's going to put dollar long trades still back in play. So that's definitely the bias at the moment. This little correction you're seeing in the dollar is not a correction that I think you need to be getting overly concerned about. This this FOMC, yeah, that comes in on the Wednesday. But before we have FOMC, we've got US CPI out tomorrow. CPI stands for Consumer Price Index. Consumer Price Index is basically what the consumer, that's you and I, what prices we're paying on the high street, what's happening to prices. Okay, if prices are going up, it means people are spending more money. Okay, people are spending more money, prices go up. If prices go up, the central banks around the world have mandates to control this rise in prices. It's called inflation. Okay, so anything up to 2%, the central banks around the world control the rise of inflation by moving interest rates. If they move interest rates up, clearly it's more difficult to borrow money because it's more expensive, so people don't borrow as much, so they don't spend as much. That controls inflation. That's just a basic economic lesson of why CPI is the key indicator when the central banks look at when they're moving interest rates. So CPI is out tomorrow, which will give us a good indication what the rhetoric will be like on Thursday. So in terms of some data that comes out in the week, we have a high impact, we have low impact data. This is high impact data out tomorrow, and it comes out at 12:30. 1:30 British summer time, which is 8:30 New York time. Okay, and they're going for up 0.2 and 2.2 year on year. Okay, also tomorrow, in fact, we've got the average earnings in the UK as well, which is also a very important bit of data tomorrow, because what's been going on in the UK, quite a lot of softening data in the UK recently, which is why the pound's come back down. Last week's data, PMIs were quite good, and everyone thought, okay, we're going to see hikes in rates again. Tomorrow's average earnings numbers, big numbers out in the UK. So let me just have a quick look at the week ahead, and then we'll go back to the charts and look at some charts. If you want me to look at anything in particular, let's say drop it in the chat, and I'll get Peter to keep an eye on it. So Wednesday we've got the FOMC and the flight dollar flight path. So at the moment, dollar is on track. It wants to continue going higher. As long as we don't break the lows, the dollar looks like it's going to want to continue. Then Thursday we have a very important ECB meeting, European Central Bank. Okay. This is one of the biggest ones we've had, ECB, for a long time, as far as I'm concerned. ECB is normally a big one. It's when they decide whether they're going to move interest rates or what they're going to do with their APP, which stands for asset purchasing and policy. And basically, they've been buying assets, which puts money into the economy. It's otherwise known as quantitative easing. You might have heard that expression before. So in the last week, all the markets have been talking about, will they be realigning? In fact, I was looking here, what the ECB, was it Parrott, the Government Council will be now talking about if there's sufficient reasons to be unwinding our asset purchase program. So they're going to be talking about it. They didn't talk about it last month, did they? Draghi said we didn't talk about it, it wasn't discussed. Now they're going to be talking about it, and the markets are getting all excited about the euro. The markets are getting all bid. Look at this. I'll show you a little tool in a minute that I use daily to show you exactly what's going on in the euro. The euro is running ahead of itself. I am concerned to see if this euro is going to basically run out of steam. There's a lot of buyers coming in here at the moment, all getting excited, all thinking that the forex market is easy, all thinking that they believe in the ECB members, and they're all getting themselves long the euro. You're coming into some resistance. I'm typically a trend follower, but I'm also aware that trends come to an end. And I'm just concerned that this run that we're seeing in the euro at the moment against some of the major currencies could be could be exhausting itself. So we need to keep an eye on that. And then, of course, we have the Bank of Japan interest rate decision on Friday. The Bank of Japan are unlikely to move interest rates. The Bank of Japan, as you well know, or you don't know, have had negative interest rates for seems like forever. They've had low interest rates, low interest rate policy, and that's the way they're going to keep it for a while. There's, they've adjusted their inflation targets or timeline for their targets, and Japan does seem to be pretty keen on keeping their low currency policy. Prime Minister Abe, he's known to want to keep the currency down, and indeed that's basically what's happening in there as well. So we'll see on Friday whether that's obviously any more sentiment comes out of there. So a lot of central bank talk this week. A lot of central bank talk, a lot of central bank moves. So it's a busy week, and I think it's worth knowing when you're trading the markets exactly what is going on and what's going on, because ultimately is what we do as traders. We try to second guess where markets are moving. We look at technicals, but having an understanding of the fundamentals is also very important, even if to keep you out of the market, because that also sometimes is worthwhile. Right, so this is the dollar index. We've discussed the dollar index. Okay, I want to start off by having a quick look at the British pound. Okay, so this is the British pound. Okay, this is the British pound on the daily. So you can see we've had a really strong downward move in the pound, all the way up from 143.75. This has been on the path. And this is not only dollar strength, this is pound weakness as well. There has been a significant softening of data out of the euros, out of the pound zone in the last few months. And if you remember what Carney, the Bank of England governor, was saying a few weeks ago or a few months ago, that they're going to start moving rates quicker and sooner. Well, that basically seemed to take a bit of a sideline when we had this real slowdown in data. Now, of course, Brexit plays on in this part as well. The softening, softer Brexit or harder Brexit. Will the government be defeated by the House of Lords motion white paper? Of course, if they do get defeated, that's going to be good for pound, because that means a softer Brexit. But at the moment, technically, pound is having a bit of a bounce. Okay, but I'm concerned with the pound in terms of the nature of these technicals into this zone. This was a consolidation zone. This is on the daily chart now. Okay, you look at these candles now. These candles, whether you have the high wicks either side, these are what's known as doji candles, and these are candles of indecision. And basically means the market doesn't quite know where to go, and that's why we've got it drawn in here in the pink box. It's indecision. You've got the markets are trying to find its direction, and then and that's within here as well. You have these pin bars. You have what they're called hammer candles or inverted hammer candles. There's inverted hammer candle there. There's a hammer candle there. So indecision, that just breathes indecision to me. That. Okay, so what's happened? We have broken out in the last couple of weeks or so. We've broken out lower. When often you'll find an indecision area, an area of consolidation. This is just pure technicals here. This one was worth 170 pips. Often when the markets finally break out of indecision, you'll see a breakout and then a retest of that indecision area. In fact, maybe I should move that little candle out a little bit. A little further, because that candle in there was a perfect little setup to take this lower. Often you'll see when you see this consolidation period break out that the next target is just the 100% extension of that. So this was about 180 pips, this consolidation period. Okay, and indeed 180 pips basically took you down to 132.50, which is pretty much close to where the market bounced from. Okay, so it hit the target. Now the markets are moving back up, but it's respecting this previous consolidation period. It's respecting it with this doji candle here from Thursday. This one we popped into it on Friday and then closed lower. Today's candle, which is still going, because this is going until 10 o'clock tonight, London time, trades in and puts in a lower low than last Friday as well. This is the bearish little setup, folks, in pound. Okay, so as far as I can see, this longer term trend, the pound weakness, is going to prevail here. If I'm wrong on this, then I think you need to be seeing price above 136.25 zone. Okay, so I'm basically thinking this is bias to the downside. If I'm wrong, I'm wrong, and I'll be wrong definitely as we get above 136. Actually, I've just jotted out some support and resistance levels as well, which you might want to. Well, what you can do, I'll just leave that there for a second. These are the levels that I'd be looking at in the room and in my own trading. You can take a screenshot of this, or you can play it back after the stream. But these are the levels I'm looking at here. 136 is the real strong level up there. 134.85 is a medium to high. It's the high of last week. We've got to get above there, 134.85, for us to maybe consider that this is a potential trend bend. Supports to the downside will be at 33.45, which is the medium support, the daily low from last week. And then you've got the 133.25, which is a 50% of the consolidation period. Okay, so this consolidation period that you've seen, in fact, it would be clear if you put it on the 4-hour chart, but if I go to the 4-hour, okay, so this is the consolidation period, consolidation range. Okay, 50% of that range takes you down to 133.25 zone. So 133.25, I think, is the next level of support to the downside. If you break there, and if you break the 133.25, then we looks as though we might be heading back down to the 132 level, which is the yearly low, which we actually touched on the 29th of May. Okay, so pound dollar longer term view now is to be looked at to the downside. Now, the other thing I look at when I'm looking at all my trading, and I know there's a few of you in the room from the Forex Signals trading room here, so this is boring for you, but it's something that I look at all day long. It's basically, I base everything on this. It's a strength meter. It tells me what's being strong and what's being weak in the currency markets, and it makes logical sense to me as a trader. If I'm a trend continuation trader, it makes absolutely logical sense for me to be buying a currency that's strong and to be selling a currency that's weak. I mean, that's, to me, as a trend continuation trader, is what I'd want to be doing. And if you're looking here on the strength meter, and you can put different time zones in here at the moment. So on the strength meter, on the 4-hour strength meter, this white line here is the British pound. British pound is the weakest currency. Okay, it's the weakest currency against the other 7 currencies. So this is done at a basket of 8. Okay, and the dollar up there at the moment is the strongest one up there with the euro. So this is showing me that the strength is still in the dollar, the weakness is in the pound. We're seeing a bit of a pullback in the actual price chart. It's come into some technical level. It's put in a bit of price action. This confirms to me that this wants to roll back over. Okay, when you're trading, keeping trading simple is the best advice I can give to anyone. You can watch all my videos, you can watch everything I put out, but keeping it as simple as you can is the most effective way to make money in the markets. And just doing this is basically simple. Bit of confidence, reasons to enter, and just doing the same thing over and over again. 3 levels of confidence: a pullback, strength over weakness, technical levels, price action, and just follow your nose once you see those signals happening. So that's what's happening at the pound at the moment. So I think cable is going to be under pressure longer term, of course. But as you know, we've got data out this week. We've got UK data, and of course we've got FOMC. So we'll see how that shake things up. It's always worth knowing. Do you take a trade straight into the FOMC a minute before FOMC kicks off? Not unless you've got a crystal ball, you won't, would you? I wouldn't, personally. I need to have a bit more of a clue of what's going on. And looking at the diary gives you a bit more of an insight. So clearly not wanting to run into bad news without getting stopped out just because of a bit of news. Right. Okay. So look, this is this picture here paints a very similar picture. Where's the camera? There it is. A very similar picture to the cable that we just looked at. Cable was the nickname for pound against the dollar because they used to run literally a big cable under the Atlantic many years ago. In fact, many years before I was trading. I've been trading for 30 years, but this is a long time ago. So that's why that's called cable. So here we go. So euro dollar, same sort of picture, yeah. Now again, as a trend follower, I always seem to like getting in on a trend on a pullback. That's just the way that I prefer to trade. Now I miss certain trades, I miss certain entries, but that's okay. Getting the pullback means I get stopped out less. And confirming a pullback with some price action, like a pin bar or like an engulfing pattern. You see my videos on that. You can check them out on YouTube. If not, I'll do one maybe on here one day on the live. But buying a pullback or selling a pullback with price confirmation is a very powerful little strategy when you're following trends. Okay, cable is weak, Jay Athens. You are right. And Swiss is the strongest on fundamentals. Yeah. You've got pound. Pound is the weakest. Yeah, pound is the weakest as the markets are looking at. Well, what they're looking at is North Korea. I mean, North Korea, the markets are getting bid. Yeah, they're thinking that it's going to be positive news, and certainly any positive news is going to be good for the stocks and good for stocks. The low yielding currencies, they get sold, like the Japanese yen, and markets move into high risk assets like stocks. Bonds get sold to move into high risk assets. Bonds get sold, yields go up, dollar goes up. Right, so look, euro dollar painting a similar picture. We're having a pullback now. Okay, so this is our breakout zone. This is basically our consolidation. Okay, so you saw, you saw price. This is on the daily now. Okay, moving, oscillating around. It's moving average. These moving averages I've got in there are just 10, 20, 40. Okay, so it's very, it was consolidating for a long time. I remember we were talking about it in our live streams on the day, during the day. How this is just so difficult to trade euro dollar for a long while, and then of course we broke out. Okay, so we broke out, and this is the base of where we broke out from, basically at this level. Then we put into this new low back down here at 1480 or 1490 or so, and we've had a pullback. 50% pullback phenomenon is something that's respected time and time again. If you can align a 50% pullback with some price action and some structure, that is a decent, solid level to get into a trend, bearing in mind other maybe factors as well, like correlation with other currencies. But here you're seeing a pullback, and we are challenging 1850. It's not wanting to get through 1850. The pin bar from Thursday almost got there. And roll back off. You've got previous structure here to the left. It's a 50% pullback. It's touching this level and wants to roll back over. The euro is being bid. This euro bid is all about ECB. Okay, that's all about ECB excitement because all these reports that I read are talking about EC tapering. Which might or well, they'll definitely be mentioning it. They'll definitely mention that inflation's edging up and they will be, but whether you get anything substantial out of it, I think the markets are going to be disappointed with what they're going to get out of it. It's more likely to be pushed the can down the road and maybe see something later on in the July or September meeting. But for me, this is a good little run that you're seeing in the euro, and we're stalling out here. Okay, so for me, I think the longer term play for this one, I know we've got all day trading tomorrow, of course. But for me, a very good run. If you can get in with some technicals, looking at some price action, looking at some bullish engulfers or bearish engulfers in this case, you've seen these wicks come in on the 4 hour. It's showing that there's supply coming in here. Supply coming into this 50% zone. Yeah. When you see a setup like that, okay, this is the 4 hour. When you see a setup like that, bearish engulfer at this level of resistance, that's a very powerful level. You hit the lows of that. You have your stops above. Very powerful little trading strategy. Trading on the higher time frame. Good swing levels. Bullish, bearish engulfers. Very good for swing levels in swing points on the higher time frame charts. I'm sure you can use them on the lower time frame charts as well. But I really keep the 1 hour chart to the lowest time frame that I go to. But this is looking as though we've got some supply coming in here. Okay, so I think this is painting the same picture that we're seeing in the cable, and that is looking like that the pound, the euro dollar might want to pull back. I did actually jot down some euro positions that I've been looking at, so I'll just leave that there for 10 seconds or so. You can do a screenshot if you want to take it out. But I think these are quite key levels that we should be looking at. Okay, support level to the downside. So you've got 1650 basically. Strong price action down there from last week. So that is the level that I think if you are selling it, and you're taking profit targets in 1 or 2 hits, then 1655 would be a nice little profit target. Okay, it's about 130 pips or so from here. So you know, that's and if you're targeting there and you've got yourself a 100 pip stop, then you know, a reasonably good risk reward ratio as well. You've got a medium resistance coming in at 50% retracement of the 1650 to 1840 level. That comes in at 1750, which is only about 30 pips from here now. That's the next level to the downside, round number as well. So keep an eye on that. You might see something out of that. Okay, so yeah, that's the same picture. And the last one I want to look at briefly, just on this quick stream today, just to get the feel for how well it is received, we'll be looking at the dollar yen. Dollar yen has been I must admit, dollar yen has been, I don't know if anyone's in the room, but dollar yen has been a real problem for me trading this. And you know, it's been a difficult market to trade. Okay, this is the daily. We're right smack in the middle of the moving averages. Look at this 200 moving average on the dollar yen. 200 moving average. You couldn't draw a more horizontal line than that with a free hand. Okay, it's been absolutely you know, a bugger to trade, quite honestly. But this at the moment is really coming back on. Well, there's two plays to this. You've got the dollar strength with the yields pushing up, the yield differential between dollar and the yen, of course. You've got positive interest rates in the US and moving. You've got negative interest rates in Japan and they're staying there. You've got the safety haven play because now the markets are looking at moving more money into risk. More money into risk means the lower yielding assets, the low yielding currencies, they get sold off. Safety play, and that's basically what's happening at the moment. You see the stock markets are pretty buoyant. Positive news out of North Korea tomorrow will see the stock market. Yeah, well, when I say will, what I will say it won't do is it's not going to be necessarily bad for the stock market. I mean, there might be just a bit of a fluffing about, huff and a fluff about nothing. But you know, the fact that they're talking is positive news, I guess. And you know, of course, if it's bad news, then turn the lights out, isn't it? Really, but we'll see. I mean, the stock markets are going to be remaining to be bid into it. I think some earnings coming out earlier as well some decent earnings out as well. So stocks are bid, yen's off. This one grinds higher, but you're going to come into some resistance pretty closely, I think, from here. You know, so whether if you're counter trend trading and you want to start fading any buys up here, anything above 110. I mean, my first level of resist. In fact, let's just tell you exactly where it is. Here is my little ideas for dollar yen. Okay, so we've got dollar yen next level to the upside. We do break this 200 moving average, comes in at 10.25. And then we've got reasonable resistance coming in again at 10.40, 10.45, which is basically well, it's just above the 200 moving average, but it's also previous structure to the left here. If you look at a bit of indecision, it's where this base, this base of the 300 pip drop, that's where it stalled. Okay, before it put on 150 pips, then went through and then came back up to test that level. So 10.45 will be the next level, but above the, oops, where has that gone? But above 10.45, above 10.45, you've got the next strong resistance coming in up at 111, basically up here, 111.10. I haven't dropped it in, but 111.40 clearly, 111.40 clearly is a level above there as well. So I'll put that as R4 because I'm going to be keeping an eye on that one as well. So R4, 111.40, which is the high from 05.21. And I would call that, that's going to be strong. That will be strong resistance, I would say, as we get back up there. If we do, you need to get back above there for us to get back into this zone, back up to the 112 zone. So this is the level. Look at it structurally, you know, there. Okay. So that's the level to the upside. So maybe the way to play this, if you are getting I mean, it looks as though it wants to grind high. Dollar's looking still strong across the basket of currencies, as we've seen, and the Japanese yen is continuing to weaken up. Okay. Right, Peter, I don't know if you've been watching any of the chat. Has anyone dropped any messages in that they want to discuss? Yeah, definitely up to something. Yeah, it is indeed. So yeah, if you want to drop something in, I'll have a look at it for you. Then I'll jump off. Just a quick introduction. Say thanks for listening in to all my videos. Hope you are finding them useful. And let me know some topics you want covered. Hello, sir. Please share scalping indicator. All these indicators, by the way, that you see me talk about. I mean, this is my Bible, if you like, or whatever religion you're following, but your Quran or whatever it is. But this is, I mean, this is everything. I based my forex trading on this, okay, because it shows me exactly what's going on in the world, and you can use this for scalping as well. Okay, I've got there's a couple of versions of it. It's I call it the momentum meter. This is the index version. So this tells me my settings here. This tells me exactly what's gone on in the last hour. So I'm looking back. My settings are 60 period. Look back at it in the minute chart. So in the last hour, they all started off level, flat against each other. This calculation works it out to be telling me exactly what's gone on in the last hour. So the last hour, I've got the Canadian dollar's gone flying out of the gate, and the pound's been under pressure. The rest of the stuff is just sort of like moving along. So they're the big players. So that will tell. I'm not a scalper, but that would tell me if I were, then I should be looking at scalping the Canadian dollar to the long side, and possibly looking at something to the downside. The euro it's below, but it's also heading down. It's coming from a level of weakness. So and look at this. Look at this New Zealand dollar. New Zealand dollar is trading down at the moment. CAD New Zealand could be a buy at this moment in time for a few pips to the upside. But that's the way it wants to go at the moment. Who knows? Great little scalping tool. You can get that inside the Forex Signals trading room, as you can with all the other tools and bells and whistles that I'm sure you've seen about in the past. Right. Okay. Did I say? Well, first of all, Ethan, I never say it is going to do anything because I don't have the crystal ball. I don't have the monopoly on price direction. I will tell you that I think that the euro dollar has been running up, but it looks like it's coming into some big resistance. Possibly, it's looking to roll back over from here. I don't know if it will, but it's coming in some big resistance. It's had a very good run up into ECB. Typically, you've heard the expression, buy the rumor, sell the fact. Is everyone getting too excited about the Eurozone ECB this week? Possibly. Maybe that's why it's come back. So bias will be looking for price action to sell it to the downside. You've got to wait for the price action. Yep. Kelly IG, what is the best broker in your platform? I don't want to start. I'm not going on a public YouTube talking about best brokers. We've got a number of brokers that we work with on the site. So I'm not going to necessarily talk about that, but a number of brokers that we do talk about. But I know certainly we get some very good rates with certain brokers. If you sign up via us, you get some. You can ping me a message on that, Kelly and IG, or Kelly IG, and I'll maybe you work at IG, do you, Kelly? Maybe I should be mentioning IG. Should I? Kelly IG. Do you do courses? We have a trading academy in the room, and we stream live every day. Maluma, Blueberry, yeah, we've got a relationship with Blueberry and also IC Markets as well. You get some really good rates. Yeah, IC Markets, great rates out of those. Thanks for that, Ushman. Yeah, we got a trading academy in the room, and we are adding to that content all the time. We also have we also do live streams around the clock. Myself and a guy called Mark, who's an absolute wizard on technical analysis. I've been trading for 33 years. He has blown my mind away since I got to know him last year with his technical awareness. He streams once a day as well. And then we've also got another guy comes in. His name is Joel. He does the morning show, the LOL show, Laugh Out Loud show, whatever LOL stands for. I'll have to ask my kids. LOL, Laugh Out Loud. He comes on, so we're streaming around the clock, all talking about these different levels and different things to be looking at through the day and so forth. So yeah, it's all in the room. So I'll leave that there. Ushman, Ali, I tell you, banks are looking at these type of things. They're not looking at my momentum meter, I'm sure, but the banks are looking at where money flows are going. This tells you where money flows are going. That's exactly what the big banks are doing. I don't know exactly the tools they're looking at these days. It's a multi-million-dollar algo thing, but it basically does exactly the same as this. It tells you where the money's flowing. So there it is. Right, folks, I'm going to leave that there. Just a quick 45-minute chat. We're going to be doing these more regularly from time to time. Do come and check us out in the trading room if you want to, forexignals.com. Forexignals.com, just follow the links here. And join us. I think you can join it's a 7-day free trial. It doesn't cost you anything to try it out. If you like it, Say we stream and you can get to know me and Joel and Mark and the other boys on the room there. So do that if you wish to. But if not, that way we'll still be coming on here now and again to do the odd stream here and there, seeing how the world what the world is up to. So thanks for joining in today, and thanks for the participation. It's a busy week, so keep your wits about you. Make sure you don't take trades just ahead of the announcements. And I'll say one bit of advice if you are trading, and I'll leave you with this, is to have a trading plan, have something written down, have something that you're going to follow. Don't just take trades for the sake of it. Don't say, I think this is going up, I'll buy it. Don't think it's going to. Got to have a rules and reasons to buy, and remain disciplined. And don't feel you need to be in a trade just because you're sitting in front of the trading screen. Sometimes the best trade is no trade. So don't feel that you need to be trading all the time. Amit, what is your view on using only price action? Yeah, I'm more of a price action person. Amit, I'm just a day trader. I'm just a floor trader by my career beginnings, and that's all I can do. I just look at what's happening in the price. When you're standing in front of a trading pit, Amit, and you're standing there shouting and screaming at people, and all you can see in front of you is what's happening to price, you get to become a price action trader as opposed to anything else. All these technicals, I'm aware of them. I write about them. I do all the RSIs, stochastics, MACDs, and so forth. But it's not something that I trade off intraday. I'm more price action, looking at key levels of support, resistance, technical level 50%, which is it's not actually a Fibonacci level. Some of you will think it's Fibonacci, but it's not a Fibonacci level. Fibonacci has a number sequence which is nothing to do with 50%, but retracement traders, pullback traders do use the 50%. Anything more than 1-to-1 sacros, typical risk reward. Anything more to 1, if you're trading trends and you're in trends, then obviously 1-to-1. I'm not a big fan, I'll tell you now, sacros, of moving stocks to break even too quickly. Nothing wrong with being letting the trade run, if it's going to run. Nothing wrong with leaving some skin in the game, but far too often traders try to get to break even so quickly they end up checking off everything they're doing. It's not. That's just not me saying that. It's my own analysis of my own chart trades that I did over a couple of years ago. I went back through all my trade journals, went through them all, and I looked at all the break-even trades and thought, but the analysts showed that had I not break even, then it would have been a better quarter. But do that yourself. But as long as it's more than 1-to-1, for me, because at the end of the day, we don't know where it's going over the next. None of us know where it's going, do we? My law of large numbers. I've spoke about it in numerous videos. You can have 100 trades, you flick a coin, 50-50. You should get out of 100 tosses, you should get 50 heads, 50 tails. You might not. You might get 40-60. You might get 45-55. I guarantee you toss that coin 10,000 times, 1,000 times, you're going to get very close to 50-50. But you don't know the sequence. You don't know how many. You don't know the distribution or the randomness of distribution. You could get 10 on the bounce that are wrong. You could have so sticking to 1-to-1. it's about as low as I'd go. Do I enjoy my years in the pit or enjoy doing this more? My years in the pit were great fun, Usman. Really good fun. I'm not bragging, but we earned a lot of money in those days. I was, and we were young. We were young. I was in my twenties, and 30s, and we just had a fun time. We could buy whatever we wanted. We made a lot of money. And it was pressurized, but you never really realized it at the time. Only looking back on it, you think what you went through. But it was just great fun. It's like what I consider to be like being out with your mates in a pub or whatever you do all day long without alcohol. Although obviously there's a lot of alcohol afterwards. But during the day, it's just hanging around with your mates. Nothing's going on. You're sitting there just chatting to your mates. And then all of a sudden, the market's going, and you start buying, or you're selling, or whatever it is. Then it calms down again. It's back to normal. It was a fun time. And it's basically who I made. I love doing what I do now because I don't have to commute. I don't have to get on the train. I have 3 young daughters that I'm involved in with the school runs and what have you. So I much prefer doing that. I trade my own accounts. I trade forex. It's not on my only account. I trade my other bigger stuff. And obviously it's I'm in control of my own destiny on it to a certain extent. I might not trade for a couple of days. I'm in control of myself, and and now I'm involved with forex signals for the last 2 years. It's been fantastic because trading, for me, sitting here in front of the screens, has been sometimes can get a bit dull. So this is a great place for me to interact with the other traders in the community. So I love doing it. I love sharing and discussing markets. Got to love what you do. You've got to love the markets, otherwise they won't love you back. Right, folks, I'm going to leave you there, and I will catch you another time. Thanks for joining in today, folks, and trade safe. Be careful this week. Good luck.